So, closing the owner's drawing account, the balance of the drawing account, as I said, does not enter into the determination of net income or net loss. And that is why the drawing account is not closed to the income summary account. Instead, it closes directly into the owner's capital account. The drawing account has a normal debit balance, so you have to credit it to close it and bring the account to zero. So you see on this example, the drawing account had a $1,500 debit balance. We credited it for $1,500. So then, because there's a debit for every credit, we have to debit the capital account. Does that make sense? So then, the balance in the owner's capital account, after you've closed all your entries into it, you see here, we started out with a $10,000 balance. We carried our figure forward from our income summary account, which was $2,445, and that was calculated by taking our expenses and subtracting them from our net revenue. And then we add the two balances together to get $12,445. And then the owner withdrew at some time over the period $1,500. So we subtract that from our balance, and then that leaves us a new balance of $10,945 in our capital account. So, in looking at temporary accounts versus permanent accounts, all revenue accounts are temporary, all expense accounts are temporary, and all drawing accounts are temporary. All temporary accounts close at the end of the accounting period. Permanent accounts are the accounts on the balance sheet. And if you remember, on the balance sheet we have assets, liabilities, and owner's equity accounts. Permanent accounts do not close at the end of the accounting period. So here you see a little table that's in your book, temporary accounts versus permanent accounts. And it tells you that temporary accounts, here again, are revenues, expense, and owner's drawing. Permanent accounts are asset, contra asset, liability, and owner's capital accounts. Temporary accounts are reduced to a zero balance at the end of the accounting period. Permanent accounts remain open and carry into the next accounting period. So this diagram is in your book on page 182. So we've been using T accounts, and those are just for illustration purposes to show you how to close these accounts. But in practice, we enter closing entries in the journal, and then we post them to the ledger. And you can see down the side here, we've got REID circled in red, and those are our temporary accounts, and that will help you, hopefully, remember the temporary accounts when you think REID. Now on page 182, it also shows you our ALOC, A-L-O-C accounts, which are our permanent accounts. The A stands for asset, the L for liability, and the O for owner's capital. Those are permanent accounts.